video, we're going to take a quick look at how to post transactions to a ledger and also talk about how a T account compares to a ledger. What you have in front of you is three very basic transactions and then four accounts that are going to be affected by these transactions. And how I have them laid out is as a ledger account, which is the formal set of accounting records that you would post transactions to. But if you look in the green, this is basically what comprises a T account. It's just an abbreviated ledger that allows us to get the information up really quickly and take a look at how a transaction affects an account. What are the debits, what are the credits, and what are the ending balances? So as we do this, just keep in mind that that green area would be what we would do if we were a T account, but we're going to do full ledger account transactions. So the first transaction that we have is the owner contributing $5,000 of cash to the business. So our cash account, we will use as the posting reference the date. And we won't use this item column, and we won't use the posting reference right now. Please don't worry about those. But if we increased our cash by $5,000, we would post a debit to the account of $5,000, and then we would also keep track of the running balance over on this side. So our balance in that account is a debit of $5,000. The other account that's affected is owner's equity. So we will record the date for that also, ignore the next two columns. And then to increase owner's equity, we would post a credit of $5,000 and keep track of the running balance. The next transaction is the business received $1,000 for accounting services earned. So our cash will increase on the 10th by $1,000. And now our running balance is up to $6,000 in this account. The other account that's affected is our revenue, $1,210, and the credit to revenue of $1,000, running balance $1,000. The final transaction is business pays $500 for rent for the office. And this will reduce our cash account by $500, so we'll put that in the credit column. And then our running balance decreases by $500 to $5,500. And we will also record that down in rent expense, debit 500, and running balance 500. So you can see that there's, for every debit you post, an equal and opposing credit, and we can also keep track of our running balances in the accounts. What I would like to do next is the next step of making sure that our debits equal our credits, and that would be a trial balance. So I'll finish this video right now, and the next one will go into preparing a trial balance.